recording locally. Welcome to Make More Marbles. My name is Brad Hart, and today I have a very special guest, Mr. Lurn himself, Anik Singal. How are you, sir? It's so great to have you.
I am doing amazing. Thank you for having me. Pumped, excited, and looking forward to where this conversation is going to go.
Yes, sir. Yes, sir. So I always love to just spotlight you and your story to start out with. So why don't you start out by telling us who you are, where you're from, how you got to where you are today, and what you're passionate about.
Oh man, that could take half the day. All right,
do it in 3 minutes. No, I'm just kidding.
Yeah, I got started. Man, I was just telling you, like, it's 21 years ago. It'd be the first time I actually thought about making some money online and looking around when I was in college. It took me forever, 18 months. We didn't have all these trainers and all these programs and stuff back then. You had to figure it all out on your own. And, but by the time I graduated, I was making over $1 million a year. So I never went and got a job, stayed in it, stayed with it. Rode many waves, as I was telling you before we started. This is my fourth economic cycle in this industry. I've been through multiple recessionary type moments. I have, I kind of laugh at some of us in the industry have been around this long. We're like, we're survivors, man. We just we get slapped around. We just stay. But with that staying, lots of wisdom comes. But what do I love? I love, and I say this, and it's weird, but I love information marketing. I'm very passionate about changing the educational systems, or at least offering an alternate. And so I think the future is all about this peer-to-peer education, where, Brad's really good at something, so I can just go to Brad, pay him a portion of what I would pay an institution, make Brad a bunch of money, and learn from someone who actually directly knows that. I'll end up being 5 times, 10 times as good at something in 5% of the time at 5 to 10% of the cost. So it's like this peer-to-peer education is kind of where my brain and my soul really has lived for 20 years. And I think it shows with the name of my company, Lurn. Everything is about education for me. So that's my passion. Outside of that, lately, I really feel like there's a season change happening in my life. I'm a little tired. I'm 39, just had our first baby, so maybe that's why I'm a little tired.
Congratulations. Yeah, I would imagine you're a little tired. Yeah.
Yeah, thank you. But it's actively running businesses and all of that is fun. It's interesting. I did it. I've done it. But investing is even funner, and it's much better, in my opinion. So now that I've put all these resources together, these connections together, and I think it's time for me to pivot. My next season of my life, I think, starting soon now, Q3 of this year, I'm going to start really pivoting towards that direction. So lots going on. I don't know, man. I mean, the story itself could take forever, but I just feel like I've been through a lot. I've had 1.7 million in debt. I've had multiple businesses fall apart on me. I've had multiple businesses scale. I've sold a business last year. So I've kind of done all the stuff that an entrepreneur is supposed to do. It's been a great journey.
I love it. And I actually came to entrepreneurship the opposite way. So I got started out in investing. I was on Wall Street. I worked in real estate for a while. I started trading. I started my own hedge fund. And I recognized that I had success in a place where most people don't, right? A lot of people become entrepreneurs, they make money, and then they have to figure out how to completely do the opposite things they were doing from an emotional and habit standpoint. Let's just compare and contrast. So if you're an entrepreneur, you use your emotion to go out and do things. You do a lot of things. You make a lot of shit happen. You make a lot of money, right? When you're an investor, it's almost like mostly sitting on your hands, looking for the right deals, not being super overly emotional, and just sticking to the program for a long time, which is very hard and against human nature to do. How have you found the transition for you so far?
Okay, what a brilliant question. And that question and that designation can only come from someone who's done both and understands both, because it is absolutely the hardest thing about being an investor. So here's what helps me. Because I think if you ask me, hey, Anik, at your core, at your bloodline, who are you, an entrepreneur or an investor? I'm an entrepreneur, dude. I'm a go get it, strategize, take something that doesn't exist and tornado through the market and make room to make it exist. Now, when you bring that mentality to investing, you're incredibly reckless and you're going to lose a lot of money. And we've seen a lot of entrepreneurs do this over the last year and a half, go dumping into crypto, because entrepreneurs are gamblers. That's kind of the makeshift, that mind that we have. And investors are not. Great investors are patient, are calm, are quiet. They're like the settled sea, and entrepreneurs are like the waves and the tsunamis. My wife is basically, she manages all of our investing side, and she's the opposite of me. So I'm serious. When you see a movie that I'm like, I love that movie, I could sign in blood that she will not like the movie. It's just we are total opposites. So we have a joke in the family. I'll go out and hunt. I'm going to go hunt for the deal. I'm going to go find an investment deal. And I already know 75% of what I bring to her, she's going to throw out. No, no, no. And that's okay. I'm cool with it. But I want to buy them all. Like, if you call me and say, Anik, I've got a great real estate I don't even know who you are, and I'm like, I'm in. Let's do it. I want to do this. This sounds amazing. I haven't done any due diligence. I just like you. You've got a nice smile. Let's go.
Yeah. Note. Call Anik for my next deal. Yeah.
Yeah, seriously. And my wife comes in and she's like, whoa, 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 whoa. I'm going to look 17 layers behind. I want the due diligence. I want this report, that report, this survey. So here's how I've managed it. I came to learn that there's one trait that I'm very good at that is very powerful for both sides, entrepreneurship and investing. And that is, wait for it, business development. I love it. It's my favorite. And you know what? I'm going to tell you right now, for anyone listening, the greatest gift that you can have in your journey, in your career, is figuring out what you hate and figuring out what you love. And having the kahunas to build your business, life, and income source around what you love. It's not hard to do, it's hard to have the discipline, because in doing so, I've had to start restructuring my whole company. I've had to walk away from projects. I've had to shut down things I was emotionally attached to. Here's what I love. I love doing business development. I love being on the phone all day, but I don't want to do sales calls. I want to do biz dev calls. I want to talk to Brad. I want to spend an hour with you on the phone figuring out what are your goals, where are you moving towards, what are you looking for, is there an intersect, how can I help, how can I support, who do I know? That energizes me, because I know if I talk to 20 Brads, there is no chance that 2 or 3 of them aren't going to become a killer deal for us. But then once Brad says, hey man, this is where I am, this is what I love, I want to do this, and I say, Brad, I got the perfect thing for you, I want to, and Brad says, I'm in, that's when Anik needs to be out. Fulfilling on that, following up with that. So my team has to be built around that so that I can go off and find the next person. And so in the investing world, that is a very useful talent in finding deals and finding money. And I love it. I love when a bank says, nah, we're not going to finance you, because that you just said no to me. I don't take no for an answer. This is going to turn into a 3-month hunt now. I'm going to convince you otherwise. So I think for someone to do both, what they should do is exactly what I just said. Find the common element in both of them. That becomes what you do. Everything else, build a team around.
Oh, I love that so much. And that actually gave me some really good ideas. So thank you for sharing that. And I hope everybody is blessed to have a wife or a partner just like yours, because I think it's so important to have somebody that balances you out. Jasmine and I have been together 2.5 years. She's way more like integrator, numbers driven than I am. I'm also very passionate. I love hunting deals. I'm like a truffle pig, but I'm not a 5-star chef. I got to hand it off to the 5-star chef and make sure the meal gets made properly. Right. So that's great.
This was a very recent revelation for me, though, because it was like 2 or 3 weeks ago. I was talking to someone. I don't even remember who it was. And when I explained how we do our investing and how my wife does what she does, he's like, oh, so you have the COO wife. I'm like, holy crap, you're right. I never even thought about it that way. I was like, she's the COO of our investing. And that's literally what I went and told her that same evening. She's looking at me like, what are you talking about? I'm like, this makes perfect sense. Like, this is why this works. So you're right. I think it is a true blessing. Now, I don't think working with your spouse is like for everybody. I will also say
Agreed.
That. It works for my wife and I, but it isn't for everybody.
Yeah. So have you ever done like any of the wealth dynamics tests or any of those that kind of tell you what type of entrepreneur you are? Because you smell like a supporter. Like if it walks like a duck and it quacks like a duck, I'm wondering if you've ever done that particular test.
So I've done something called Culture Index, which I'm a avid follower of. I love that. If you want to get hired by us or work with me or partner with me, you're going to go through it. And in that, I am the most extreme entrepreneur that an entrepreneur can be. So when I wear my dots, they have these dots that define you. And I went to their conference, they have their consultants walking by and checking, and they would all look at mine and go, whoa. And they would just say, you are unhireable. And I was like, yeah, I would take that. It was kind of offensive, and I'd take that as a compliment too. But they're like, yeah, if your profile ever came up in one of our companies, like that we consult to hire for any position in the company, we would reject you hands down immediately. And that's just because, so when you said supporter, that's actually how they define me. So I am very ambitious. I will run, fight, but I love helping the person but all I need in return is that person to show me some effort, work, and some talent, and I will go to war for them. But also, the first time they disappoint me or do something unloyal or do something wrong, I'm done, right?
Yeah.
But they actually define that. I've done Enneagram, an 8-7 with a 3 wing, and that also, an 8 is always said to be the person that, is like this ruthless leader, but loves to support the underdog. And sounds like
I love it. I could geek out about this stuff all day. My question is, how has this evolved as you learned about yourself through the different iterations over 21 years? How did your company start out? What was your original idea? Why did it succeed or fail? And what does it look like more today? I think we have a certain sense, but I would love to hear some of the offers that didn't work, some of the systems that didn't work, some of the hires that didn't work, et cetera, that really, color in the journey.
Happy to talk about it. It's super relevant. So when I first started, I didn't know what I was doing. I just wanted to make money. I mean, honestly, right? So I really started enjoying internet marketing. I like teaching it. And then I quickly realized I don't know everything and I don't want to know everything, but I realized I have an audience. And when I have an audience, I can sell other people's stuff to them, right? Because I would do affiliate marketing. And I sat there and I looked at numbers and I was like, okay, so if I sell 100% if I sell something of my own education to this audience, I make 100%. If I do an affiliate endorsement, then I make 50%, but they get to keep all the back end. So actually, I maybe make 20%, 25% of that relationship. And as time goes on, I make less and less and less because they keep monetizing that audience. And that would keep me up at night. And I was like, well, what if I publish people? So now I end up making 70, 80% instead of the other. So as time went, I went into the publishing business. So I went from having my own courses, and by doing the publishing business, it allowed me to really be able to bring other talent, other skills to my audience that I could never bring. That did really well. And then I was on this elliptical machine one day, and I was thinking about education and how useless I felt college was for me in my life, and how so many people are burning so much money in it. And I started thinking, I was thinking about this my one interaction with this one professor I had that I remember so clearly till this day. It was sophomore year, my marketing professor, Marketing 101. I went up to him and very like a joyous, happy-go-lucky kid. I love marketing. I was like enjoying my marketing and psychology classes so much. And I'm like, Dr. blah, blah, blah. I'm like, what companies have you run marketing for? You're so smart. You know marketing so well. And he looks at me and he's like, what? And I was like, what companies have you done marketing for? He's like, none.
Whoa.
And for me, that was like taking a big balloon and stabbing it with this knife, and the air just fiddles out. And I was like, what? And he's like, none. I'm like, but you've got a lot of white hair, dude. You're old. What the hell? Never, ever? And he's like, I've been at this university for 25 years.
Wow.
So you teach it, but you've never done it. And you're in the textbooks. And I just kept thinking, I'm like, why am I learning? Well, why am I paying you? I don't understand. If all you're doing is reading me the textbook, that textbook cost me I don't know, $300, but I'm paying $3,000 for the class. So I got to a place where 2 + 2 should equal 4, and at that moment, the traditional educational system started becoming 2 + 2 = 3, and it just was not computing for me. So I went back to that moment, and I was like, man, we should really build something that will help peer-to-peer education. So I was like, hey. This is 2000, I don't know, 4, 5, maybe 6. And at this, the time when outsourcing is huge, everyone's going to India, and technology companies are being built left, and all this. And I was like, hey, I'm Indian, I'm brown, I know the language. I can hop on a plane and go to India. And I got an advantage over everybody. So I did. I went to friggin' India, and there was an outsourcer there who used to do some work for me. I just showed up at his office. Turns out, I didn't even know. He has a bunch of people there. Next thing I know, a few months later, I bought his company. And I was like, we're going to build a tech platform. We are going to build this company that people can publish content onto, and then other people will just buy that content, and we make a sliver, and we build this marketplace. It was this brilliant idea, right? And we're going to have affiliates, and we're going to do all this cool stuff, and we're going to kill college. And only one problem. I don't know. If you put a gun to my head right now, Brad, and said, get a website up on the internet, I would tell you pull the trigger, because unless you give me a phone, I can't do it. I'm not technical, man. I don't understand engineering, technology, coding, computers at all. So, and I don't have a co-founder. I don't have anyone else that understands that stuff. So here I am off to build a tech company where the core competency of that company is going to be technology, and I have zero experience in that, and neither do I have anyone representing me on my side that has experience with that. Years went, I probably poured a few $1,000,000 into it, and what we built was total rubbish. It wouldn't work. It was bubblegum patched together. In that time, that distraction, my publishing company completely fell apart. And then 2008 happened. And so by 2010, I'm 1.7 million in debt. I have to shut down my India operations and my US operations. And I had to take this code that I then had reviewed by my best friend, who happens to be a brilliant coder. Go figure. Could have just asked him to check things along the way, but I didn't. He messages me and he's like, I am so sorry, but I just throw it out, dude. There's nothing here. So I have it on a hard disk still in my parents' basement somewhere. I like wanted to hold on to it just as like something to remind me of like what not to do in life. So the best thing that came out of my tenure in India was that I met my wife. My now wife at that time was head of HR. Totally inappropriate for us to be doing anything or dating. So I eventually had to fire her. That's the joke. I eventually had to let her go because I was like, I want to date you and eventually marry you, so you need to be out of my company so that we could. Because in India, it's very common for companies to have rules and
Sure.
that are like no inter-office dating. So we had that.
Well,
So I
Jasmine and I
left
met the
India.
same way. Jasmine and I have
But
been together 2.5 years. She was my client for a year before that, and I had to fire her because #integrity, so she could be my girlfriend. She was very confused. She's like, I'm a testimonial. Why don't you want my money? And I'm like, you'll see. I didn't leave her hanging for too
yeah,
long though, but that's awesome that you got
yeah,
the same way. That's so fun.
yeah. So we so at this point, I had to like rebuild the company because I had to go from like almost 95 people, 2 offices, down to like 6 people. I was 1.7 million in debt. My health was falling apart. So we rebuilt the company, and I actually went into the personal development space. And I went back to the simplicity of like, I'm just going to sell my own information. And then I revisited the idea of the platform wasn't dead for me, right? I revisited, and I was like, well, by the way, this is the irony of this whole story. So this is like the last week of the India office. We're getting ready to shut down. And my wife now, at that point, she comes running into my office. She had a laptop in her hands. And she's like, have you seen this? And she shows it to me, and I hadn't. And what she has on the website was Udemy.
Wow.
And I'm like, what the heck is that? And I start looking at it, and I'm like, where is the camera? Who has been watching me and listening to my ideas? These 3 guys sitting in Turkey had literally built the exact company that I had dreamt of and tried to build for years. That company is now worth well over $10 billion, I believe. So I take great comfort in knowing that, you know what? The problem wasn't my idea. The problem was execution. Execution is something I'm learning and getting really good at now. Ideas, I've got plenty of. So I'm like, all right, Anik, let's not get depressed about this. Let's get excited about the fact that you have billion-dollar ideas inside of you, but you just need to learn how to execute on them. So eventually it turned into me wanting to build another platform, but building that platform for the sake of just entrepreneurs. So I saw, at this point, Udemy's been out for years. I see their wins, I see their losses, I see the goods, I see the bads, and I'm like, you know what, I don't want to build that. I want to build something that just brings entrepreneurs together. I made the same mistake pretty much again with the tech side. This time I thought I could hire my way, so I hired more smarter people to lead the tech. That doesn't work. You can go get the most brilliant VP and all, but you know what I've discovered now, in hindsight and everything. See your business. What is the core competency of your business? Is it sales? Is it marketing? Is it content? Is it technology? What is the main thing that makes your business valuable? And make sure that that thing is either your expertise or the expertise of another equity owner in your business. And I cannot stress this lesson enough. So if I want to build a technology company, like I am right now in the process of building a technology company. I stepped into it. I'm taking a big equity role in one of them. I'm pretty excited about it. And my first conversation with the founder was, do you have the tech and product? He loves the tech and product. He's like all about it. And I said, here's my deal. I never want to be in a meeting about tech and product. I am useless. I bring no value. It makes me fall asleep. It's painful. I will be out selling this thing. I will be out talking to customers. I will be bringing them to you. You handle that. Are you good? And he's like, I love it. I never want to talk to a customer. I want to focus in my black dark room and build this tech. So whatever it is, let's say you have a great tech and you need it to be marketed. So if you have a great technology, marketing and sales is it's a core thing, right? Like the product is, go get yourself an equity. They don't have to be equal partners, but they need to have equity. And they need to have past experience being an entrepreneur. That's really important too. So my next try at the platform got much further along, and we built something very cool, but it's become so difficult, so expensive to maintain and run that in hindsight, it's like, is this really going to ever have the return at the opportunity cost? Last but not least, okay, let's go back to being a publishing company. And I'll tell you exactly, because I had a call recently with a very, very, very known marketer, great guy. He called me and said, hey, I'm thinking about doing what you're doing, Anik. I'm thinking about becoming a publisher. Can you give me some advice? I was actually driving, and I got an audio message from him. I stopped. I pulled over, and I called him. And he picked up. He's like, what? And I said, I'm pulled over on the side of the road. I wanted to stress to you the urgency of this. I cannot wait even 35 more seconds of you thinking about this. Don't do it. And he's like, what? And I was like, here's the deal, bro. When you build a publishing company and you're going to go publish multiple people, you are going to, by nature, have multiple distractions. You're never going to be able to get very good at any single one of them. Or if you want to get very good at every single one of them, you're going to have such a deep staff. Your expense structures, your overhead, your costs are going to be so high that your margins are going to get so squeezed that the day will come when you're like, why am I doing this? Even better, or even worse, you can't just hire anybody you have to hire the most brilliant people, because building funnels and optimizing funnels and running publishing businesses is hard. It's not that easy. And guess what? It's not a very prevalent industry. If I want to hire someone in SaaS, there are literally tens of thousands of SaaS companies. When you go to the main SaaS conventions, there are literally 45,000 attendees at those conventions. The talent pool is much bigger. Publishing, I've actually had to hire positions at Lurn, which I confidently feel there's about 15 people in the country that are qualified to do that role. 15 total. I have to convince one of those 15. So imagine what I have to pay them, and imagine how hard I have to work to retain them. So building a very scalable publishing company is fun. It's great. I've done it. But it's not the direction I'm going to keep going in, because now with the cost of advertising, with the cost of running business, with the legal risks of running these businesses, you get to a point where your margins don't justify any of that. So honestly, right now in the publishing space, I'm really digging the whole know what you're very good at, and instead of horizontal expansion, focus on vertical expansion. Offer more and more services to that audience. Go deeper with that audience. You will have a profit margin that is 10 times by going horizontal. You'll have happier customers, easier life, and a marketing spend that is literally 20%, if not 10%, of what it would be if you go horizontal. That is my full spiel.
No, that's perfect.
Because I've been living in this, dude. I have been processing and dissecting what I've done, what decisions I'm making, and where my next season is. And I've been looking at it from like this 40,000 foot overview. And I'm like, oh my God, I get it. I see it. I see the current landscape, why I should not do this and why I should do this.
So this is so helpful. And I want to dig in deeper and just get a little bit of clarity after you get some water. So how would you define a publishing company versus a traditional coach, consultant, internet marketer, influencer, whatever you want to call them? Like, where does that distinction live in your mind?
Yeah, because technically, if you're selling your own content, you're still a publishing business. When I say publishing company and I say being a publisher, I'm talking about multiple brands, multiple topics. So
like Agora would be a good example.
Agora is a prime example.
Exactly.
Agora is a prime example. Yes. I mean, they're exactly. And for a while, that's what Lurn was becoming. Lurn was like, hey, we're going to be basically the Agora of the entrepreneurship space. And we did become, and we're rocking it. But Brad, I'm just going to be honest. I was waking up every day with just massive stress. And it just stopped being fun at some point because margins are getting super squeezed right now. So, I'm talking to another buddy of mine who does ads to webinar to like a 2K program. And he's killing it. they're scaling like crazy, and he's in the same industry as that we would be in. And I'm like, this is like a few months ago, and I'm like, I'm hurting, dude, as are most people. The model of ad to webinar, evergreen webinar to, it's not hurting, it's doing fine, but to scale it, you're starting to have to rejig the numbers. Like, okay, fine, if I can get 70% of my capital back right away, I'll be happy, and then I'll make it back in the back end. That was not something we had to do 2 years ago. But I'm talking to him, and like, his numbers are just playing out differently. Well, you know what? He is the most obsessive focuser I've ever met in my life. This guy will run a split test between using the word is or not using it. Like, he will split test the crap out of everything. And so he says, I don't want to waste my time on anything else. I don't want to launch new offers. I don't want backends. I don't want this. All I want to do is split test every single minutia part of this funnel and optimize the crap out of it so that I don't care what Facebook and Google are charging. I'm always kicking butt. And honestly, that's brilliant. That's the way you should think. But when you've got 17 funnels, trust me, there ain't enough time in the day to think at that level for 17. And if you think you're going to hire your way to it, it ain't going to happen.
Yeah, because nobody's ever going to care as much about your business as you do, because they don't have as much incentive. Even if they are a minority 100%. Equity holder, they're just never going to take away. That's the price of being an employee. You get to turn your brain off at the end of the day. You don't have as much upside, you don't have as much certainty, and you can get fired and have to move around, shuffle around. But at the end of the day, you can turn your brain off and be with your family.
Yes, 150%. So that is, so when I listen to him talk, I'm like, I hate, because he gave me that advice years ago and I didn't follow it, right? So I'm like, I hate you, you stupid son of a, you're right. But I'm also inspired by it, and that's right. So for me now, kind of the direction we're moving in, I'm like, what do I love to do? What do I want to teach? What am I the best at? What can I walk into a room and have a swagger about? Like, and just be like, yo, I'm better than you, I can teach you. I'm like, well, we'll pick that topic, and I'm going to make it so that my funnel is so deep and I offer so many amazing services to that person that at the top of it, I can pay Google and Facebook whatever the hell they want for eternity and never stress about it. And that has been awesome. It's been one of like the most like, right? And now also, of course, if I create simplification in my life here, I'll create complication here. Well, we're launching a SaaS company now, and I launched a consulting company, and I'm going much more into investing. But tell you what, even though there's all that work and all those hours, I wake up every morning and I'm like, let's go get it. Like, this is awesome. And this is what I tell entrepreneurs, and I'm going to tell everyone listening to this. The easiest litmus test, if you are on the right track, is look at yourself when you wake up in the morning. Are you thinking, oh, another day? Or are you thinking, hell yes, I get to attack this day? And until you're thinking, hell yes, I get to attack this day, keep changing what you're doing in your life, because there's a factual reason that's happening.
Yeah, it's not worth it. It's not worth it to keep living the life you hate. Even if you're making
I don't know, man. I'm 39 and I'm starting to say, like, I'm looking at some friends of mine that are 25 and I'm like, dude, please, what would I tell myself? Holy crap, I wish I could go back in time, right? Just 2 or 3 simple things I would tell myself would, like, fundamentally have changed my life by now. But yeah, absolutely. You have a different perspective and everything. And the perspective I have now is, man, listen, time and health are really, like, those are the most important things. Time is limited. And every day, every hour, every second that you're alive, that means you have one less of that in your life. You should spend as much of it being happy, excited, and you know what? Not even happy. Listen, Brad, you can be excited and not happy. I don't believe in all this, like, let's always be happy. It's bullshit. It never happens. But let's always be excited. Let's always be hopeful. Like, if you don't have hope, you're not going to have anything else.
Yeah, agreed. No, it's really, really wise. So it's interesting how you've come kind of full circle. You've tried all these different things and you're just like, hey, just give me a simple funnel. I'll tweak it until it's perfect. That'll be a cash cow. I don't care. It's super deep. I don't care how much they charge me for the traffic. Have you ever thought about starting your own traffic platform? Because if I feel like a guy like you could really make a dent in that industry too. I mean, why do we have all of these lords and masters that basically give us all our traffic? There's only a few platforms.
Yeah, sounds like a lot of technology stuff that I just wouldn't know how to do, probably. Yeah. Here's why I went full circle, because I actually have a very mathematical reasoning behind it. So now that I'm turning my head more towards investor, right? So everything I'm looking at, because the way I said this recently And it was my own realization. I was making a short video and I ended up saying it and I'm like, well, that's brilliant. I'm like, there's 4 stages to wealth creation. Stage 1 is skill. So it's where you gain a skill. This is why technically we go to college or whatever, right? It's like you're supposed to get proficient at something that you end up becoming much better at than most people in the world, and hence someone will choose to pay you. Second is income. So you need to accumulate high income. This is assuming you're not coming from a rich family or a lot of money. You need to get money. Third is cash flow. You need to take that income and invest it in such ways that it generates cash flow. So you have to be very focused on cash flow. Like, you want an actual immediate return. So you actually should not be buying some of the crypto that you're buying or some of the other stuff you're buying, because you should actually be focusing on building cash flow that is there for you regardless of your job or not. Last step is what I call asset accumulation. That is the stage at which all you are doing, you don't care about cash flow because you have more than enough money in your life, income. You are now trying to buy things that you feel will appreciate the most, hence increasing your net worth the most. I am now in my place in my life where I'm kind of between stage 3 and 4. So I'm in between like cash, like I got enough cash flow now that like I would live a very good life, but not quite like the rich life. So I'm still working on cash flow. But I'm also starting to look towards asset accumulation because now I have a daughter and I'm looking at like multi-generational wealth. So when you put that hat on, let's talk about a publishing business. If I run a publishing business with multiple authors and multiple experts, I'm going to make a lot less money right now. My margins are going to get squeezed out and I'm going to work a lot harder. Well, why the hell would anyone do that? You would do that because you think eventually I'd like to sell this thing. So I'll take some of the dinging now only to build that asset value. Well, here's the problem. The way the markets are reacting nowadays, valuations of companies are starting to pull way apart. So a publishing business is going to carry the multiple that is far, far, far lower than a SaaS business or a marketplace business or hell, even an agency business, anything with recurring revenue. So if I'm going to put all this time and energy in, why not put that into a business that eventually has the ability to having a valuation factor that is 10x that of a publishing business, while at the same time building a simplified publishing business that I treat as a cash cow. I never intend to sell it, but it's simple, it's a few people, it's very profitable, makes a ton of money. I use that money to keep investing, building up my cash flow, and I take all that extra time and energy and I build a company that I believe will have a lot more asset value in the future. That's probably another one of the big reasons why it's like, well, Anik, you've been looping around in the publishing space. How come now you're kind of exiting the loop? It's because, my time now has finite value. Like, time is a limited resource. So I'm done messing around with that. Like, time, every single minute of my day now, I'm like, hey, am I getting the most out of that? And so that's another part of the reason why I'll be doing what I'm doing.
No, I like that. I like that approach because you're really thinking about it strategically instead of most people are just throwing an idea against the wall, see if it sticks. It's like, it's going to take you the same amount of energy, the same amount of years, the same amount of aggravation, maybe even more aggravation to launch one type of company versus another. It's better to just start with the end in mind. Like, what are the valuations for the different companies I could create? What are my core competencies? Who do I have in my network that I could partner with or become equity partners with? And help them to become wealthy along with us. Like, we're building blockchain companies right now because basically Web3 is just needing and screaming for all the tools that Web2 has already built. So all you have to do is be smart enough to find a tool that hasn't been built or built well in Web3 yet and go build that. And you could theoretically have, a 9-figure exit in 5 years, right? Because guess what? Crypto is not going to zero. Blockchain is not going to zero. It's going to have some tumult, but we generally go in 4-year cycles. So if you can be building now for the next big cycle, you could potentially have a huge output there.
Yeah.
So it's just interesting
Perfect.
to hear you say that too. So
thinking strategically, exactly.
Yeah,
And that's why the SaaS company I took an equity role in right now, I came in and I told the guy, it's exactly what I told the founder. I said, hey, listen, I'm not doing this for the rest of my life. This is a 3 to 5 year. And he looks at me and he goes, well, hell, if you can sell it in 1 year or 2 years, I'll be game. I'm like, nope, not going to sell it in 1 or 2 because the valuations suck right now, but that's going to rebound. I want to be back and have a juicy company when these VCs are, or when the private equity shops, or when the markets are going crazy again, looking for, good companies with reliable revenue and recurring revenue. So you're 100% right. That strategic side, I think younger entrepreneurs especially, whether it be young in age or young in their experience as an entrepreneur, because we're all blood and drive and raw energy, right? And so now I would say a lot of that is tamed. So a lot of my ideas Like I put them in buckets and I make sure, is this worth my time, right? Someone offered me recently to do some consulting for them. And I was like, I haven't done consulting forever. And they threw a number at me and I was like, well, that's interesting. And I went back and I did the math and I'm like, shit, that's worth it. I'll say yes to that. Like that's a good, use of my time. But I'm like strategic about it. It wasn't like emotional. I wasn't like, man, I don't want to deal with clients. And I was like, hey, what's the logical, strategic, plus that person is someone I want on my inside because of like some other strategic reasons. So
yeah, it's almost like you're getting paid to build relationship capital. It's kind of nice, and you're getting paid well. So there are a few unicorns though that don't sell. So like famously recently, Russell got a crazy offer for ClickFunnels. I'm guessing in the 10-figure range. And they said no, right? They came together and said, no, that's not the reason we're in for this. We're actually going to build ClickFunnels 2.0. What do you think goes into a decision like that for you versus a decision just to sell and get out when the getting's good?
Sure. Actually, I can't get into the specific details of it, but I had a pretty large offer to exit one of my businesses that the decision in the end was no. And for me, the decision was no for two reasons. One was not feeling like I was done with the business. So there was still a part of me felt there's something more here. There's something more I can do here. But the second bigger part was the acquiring party. And did I feel that the business would be able to sustain and survive under that leadership? And that, by the way, not a knock at them, because they might be watching this thinking, what's he saying? We're bad. No, not at all. Like a great CEO for one type of business does not mean that they're a great CEO. Like the CEO of American Airlines cannot run one of the companies that I'm doing. Like they could learn to run it, I'm sure, but like it's a very different business, right? So yeah, totally. I would just see what people don't realize is this. So Brad, I'll come to you right now and I'll say, hey Brad, you own company XYZ. It does $1 million a year in revenue. And you're like, yeah. And I'll say, Brad, I'll buy your company for $1 billion right now. And you're like, that's yes. Awesome. Let's do it. But then I'll say, great. So Brad, I'm going to pay you $1,000 today, and I will pay you 10% of all of what your business generates in revenue up and until the business hits 10 billion in revenue. And if it's generated 10 billion, you'll be paid $1 billion.
I got it. Yeah.
So now you can go around saying, I got $1 billion offer for my $1 million a year company. But it's like what most people don't realize is the numbers do not matter. For anyone who's ever been in the buy and sell world, they'll tell you the numbers don't matter. No one gives a shit what the offer is. What are the terms of said offer?
Right. Yeah.
What are you paying me up front? What do I have to do? So I don't know in Russell's case at all. I've not talked to Russell about it. But in my case, I can say that I read the terms and I was like, Yeah. I kind of feel like I'm still going to have a job. And the problem with me now is I have enough money. Like, if I took that money, it would be nice. But, like, my life would not change at all. Like, right. There would be not one change to my life. So it's like, well, I don't really need it. And I'm not, like, excited about it. And I feel like there's like 17 ways this could go down the pitter for me and not in a good direction. So I'm not going to do it, right? And I think that's why a lot of deals fall apart from the founder side is what I've seen.
Yeah, that makes sense, right? If you got a big check, you could walk away. That's a whole different conversation than, oh, you got a big check, but now there's all these hooks in you and you only get certain amounts at certain times and you got to keep working.
And that almost never happens, man.
Yeah,
I would say like 1% of acquisitions are the way people think acquisitions are. People think, oh my God, some of such company got bought out for, $500 million. That's what the press release says, but it's like they don't talk about the terms. It's very rare. And by the way, that's my dream. So I learned so much in the last couple of years about building an exitable business. Is the best way to build an exitable business is when the customers of that business have no freaking clue who the CEO of the business is.
Right.
Because otherwise, it's dependent on you. And trust me, when you sign over that business to somebody, you're signing yourself over too, because they're smart. They're not going to let you go. So yeah, I've learned a ton, So like the next companies I build, I want to build them in such a way that hopefully they're like, hey, just stick around for 6 months to help transition and then get out.
So
That's
I just
awesome.
want to point out for the audience as well, folks that aren't familiar with Anik, like some of the mindset things that we've seen along the interview here. So one was the idea of like, hey, I have billion-dollar ideas. I just don't understand billion-dollar execution yet. So that was thing one. I really thought that was great and a great thing to take home. It's all about the boat that you're rowing, right? It's about the vehicle that you choose and the valuations that you potentially get to, because your life force is limited and you only have so many at bats, if you will. Maybe you'll get 4 or 5 chances to start a company in your lifetime for real. So you better do it right. And then finally, like you mentioned kind of aside, like, hey, my lifestyle wouldn't change one bit if I made more money. Well, that basically means also that you've scaled your lifestyle to a point where you're comfortable and you're not continuing to scale it the more money you make, which is
Hmm.
also a skill, right? It's a difficult thing emotionally to handle for people. They start making money, they want to spend more money, and they never actually get wealthy. So it's finding that level you're like, oh, this is good, and then just earn above that and invest the rest, essentially. Or do you have a different
Yeah.
philosophy? Have I misrepresented any of that?
No, I find it's weird. Like my relationship with material objects is just strange now, and I don't understand it quite. And so sometimes I'm like, maybe I'm just getting old. I don't know, right? But 20 years
I'm only
ago,
2 years behind you, by the way. So if you're old, that means I'm old. You're not old. So
so all right, so good. So I'm just saying, uh, 20 years ago, I want that watch. Okay, so I have a beautiful watch collection. I've got my most expensive watch is 40 grand. Do you know which watch I'm wearing right now? This is my brand. This is a company I started with, and this brand targets our military. It targets people, certain sections. I have a great love and deep respect for our military. I wear this watch nonstop. This watch is like $450 because it means something to me, right? So it's like my decision making and my desires are so different. I haven't bought a watch in like 5 years, but I spent the last two trying to build a watch company, right? And you start to think different. And so cars, like I love cars, and I have all the cars I want. I know I want more cars. I don't have any garage space, but for that I have to like convince my wife to move, and that's like an uphill battle. So we're not, I'm working on it. But if I want to move tomorrow to a bigger house with a larger garage, like I can do it. Can I buy the $30 million mansion cash? Like no, but then do I really want that? Because the amount of maintenance I have to deal with on my house times whatever 10 or whatever it would be, I don't want to deal with that. So I think lately it's more like I'm trying to simplify some things so that I can keep my mind focused on the bigger things. I've become very like focused on like legacy, impact, and like using my time and money to do something that can really help for other people. And that's also why I'm like looking at a lot of things I'm doing and I'm like, hey man, that might make me a lot of money, but I don't really like I don't like the impact it's creating. It's not creating enough, or it's creating bad impact, or well, not bad. I haven't done anything that does that, but it's not creating enough impact. So yeah, you stop being about material things at some point. Now I might go through a period where I jump again. But yes, you're right. What I won't do, Brad, I became incessant about this a few years ago, and I think it was a couple of different things Grant Cardone said to me that kind of got me ticking. But I was like, yeah, I will not exceed my ability to live beyond my passive cash flow.
like it. Yeah.
I will not exceed my ability to live beyond my passive real estate cash flow. So if I want to live a certain way, great. Go make a crap load more money, invest it, and make sure your passive income coming from those investments is covering that new style of life you want to live. So I won't do it till then. So once that happens, maybe I'll upgrade.
Okay, I got
More
a few
time.
more questions and we can wrap this up. I want to be respectful of your time. Have you found any other unique passive cash flow assets that are not real estate? I guess is a great question. Most people think real estate.
So I made this video on YouTube that like is getting so much hate and people are just like losing their minds over, and which was I said I refuse to invest in stocks. I only invest in real estate, and here's why. One of the things I talk about is like leverageability, cash flow, and of course, all the people are coming in. They're like, "You dumbass! You've never heard of like dividend paying, and you've never heard of like margin loans." I'm like, "Yeah, I have heard of all of those. Dividends pay like 3 to 4%, and that in a downturn economy, that's gone. And then margin loans are some of the scariest things on the planet, right? Like they scare me a lot, especially like anyone who's gone through a margin call in the last couple months can vouch for that. No, man. Short answer to your question: real estate. You earn money in 4 ways from real estate. it's just, there's only one there. You got cash flow, you got appreciation, you got debt pay down, and you've got tax savings. There is no other asset I have found that pays you in 4 different ways. And I like to do a lot of commercial real estate. I love to do like triple net and stuff like that. So right now the economy is tanking, and I couldn't feel, there's no effect, because those things are, now, of course, I don't get those 500% appreciations either, but slow and steady is kind of how I like to go. What else is there? Nothing compares to real estate. It doesn't mean I don't do other stuff. I love crypto.
Sure.
I have.
No, I get
crypto.
it. I get it. I'm trying to think of like, are there any other really strong cash flow assets that don't require the type of capital that real estate does? I know there's way to leverage and ways to bring on partners and things like that. But if you start thinking about like tokenizing real estate is one, or even like smaller real estate properties like vending machines that produce cash flow or something, could be interesting.
So I was going to say, there's God, what is her name? She's like blowing up on TikTok and stuff right now. Cody
Sanchez.
Cody Sanchez. I like what she's doing. I like what she's teaching. I want to learn more about that stuff. I think that's definitely a great place to go. Boring businesses, as she calls it.
Yeah.
I think there's a great play for me in the future of private equity, buying existing businesses that are running, that you just keep the main person in place and run cash flow and make profit. Something there. I haven't done any of it though.
Yeah. Here's my play. And if you want to get involved, you're more than welcome. Be my guest. I'll send you a text. I think finding boring cash flow businesses that don't require a lot of skill to run, and then partnering up with a younger entrepreneur, somebody maybe went to Babson where their only degree is entrepreneurship. They want to be an entrepreneur. They've already built businesses in their company. You just give them like, here's the capital. I own 51%. You earn your equity. Go build this boring ass business. And then they get an exit and they get to be wealthy after 5 or 10 years or whatever. And in the meantime, you get a ton of cash flow, but you're not running another business. I think that might be the best way to run an entrepreneurial venture that produces cash flow, in my opinion.
Love it. Yeah. I mean, it's theoretically, I love where you're going. I do see that's one area where I can see myself in maybe a few years after I've really mastered the real estate game, which I'm getting close and closer to. That's an area where I start to see like an uptick in returns, because I think you can get a higher returns, higher margins. I just don't know anything about it.
Yeah, fair enough. I'll keep digging. And if Cody, if you're listening to this, I'm a fan as well. I just got into your stuff. I was recommended to you by another investor friend of mine, Mike Brown. So would love to chat sometime. Anik, where can people find out about what you're working on, what you're excited about? One more question before we get into that. I'd love to hear about your charitable giving strategy if you have one.
I don't have a strategy. I just give. So
fair enough.
we have a foundation. We have our own foundation called Singal Foundation. You can see it at singal.org, singal.org. We are really into. We have a heart for kids, so most of our projects tend to do with kids or abandoned seniors. So we've helped build a hospital. We've built multiple schools in India. We helped save an orphanage that was about to go out of business in Nepal. So we tend to focus on stuff like that. And really, it's just when the right project comes along, we kind of pray about it, and we get a voice that says, give the money. So we don't really have a per se strategy, but we do give a lot.
Well, my monthly donation is going to singal.org. I give $13.70 a month right now. It's going to be up to $1,800 something. I increased it 37% a year every year. So that's where it's going this month, and I appreciate it. I was actually looking for an idea, so I'll send it over. And then finally, where can people learn more about Lurn? Where can people learn more about your projects? Where should they do?
Listen, follow me on social media. I would tell you right now, you'll see a lot of what I'm working on. There's huge shifts going on, and if you kind of want to track those shifts and see how I manage them, go to YouTube. That's what I would say. Go to YouTube and find me, Anik Singal, A-N-I-K, last name Singal, S-I-N-G-A-L. Lots of great content there. I'm tripling down on my podcast. I'm going to have 3 episodes a week starting in July. I'm going to have 2 shorts a day starting in July. I'm going full-blown on social media. And through that, you're going to see some big changes I'm making to Lurn, which will be launching in September. So fun stuff. So I'll leave that. Otherwise, you can go to lurn.com. But I think if you go to lurn.com, you're gonna see more of what we were doing. If you want to see more of what we are about to do, go to YouTube and follow me there.
I love it. I'd love to be involved. Let me know how I can help. Everybody listening out there, please reach out to Anik and get involved with the various initiatives he's doing. Check out lurn.com. Check out his social media. Is it all just Anik Singal? Is that your handle for everything? Yeah. Okay, cool.
Yeah.
Thank you so much, man. It's been a pleasure.
Yeah,
it's great to connect again, and we'll talk soon.
All right. Thanks so much. Bye.
All right.